How many years someone will take to reach that level of maturity?
If you go to any social media, this has 1:3 RR. This has 1:5 RR. But in real life, how many people are following that?
So you were bullish. In one account you did call bull spread.
Yes.
And the other account you did put bull spread.
Yeah. Yes.
Why? Please allow me to use this and develop similar something like this in Stockage. I mean, with your due permission, I want to take that. It's a brilliant way to look at things. I have never thought that way. Welcome friends to yet another face-to-face. This time we are talking about trading. This time we are talking about Nifty, Bank Nifty, mid-cap, index options trading. This time we are going to learn the art of trading from a simple graduate who has done phenomenal work in his life as a trader. Let's welcome our friend Shiju.
Thank you.
Welcome back.
Thank you.
So we have known about you in yesterday's video. Very inspiring story.
Thank you.
Personally, I am very, very inspired from the way you have built yourself. You come from a farmer family and from there graduating and then moving forward. It's very inspiring. So in this video, we're going to talk about your strategy.
Sure.
How you made what we have made.
Sure.
Sure. Please go ahead.
Okay, so if you look at the screen, the first thing I mentioned, I'll help you to think and approach the market in a probabilistic way. So there is no holy grail in the market, absolutely nothing. So everything in the market is like probabilistic. If you're able to think probabilistically, I think 50% of the issue is resolved. Because what happens is people do over trading, thinking that, okay, this trade is going to work. But once you understand that this trade is one of the many trades I'll be doing, the outcome of this trade can be positive or negative. But if my strategy is good, in the end, out of maybe 100 trades or 1,000 trades, I'll be net profitable. Once you understand that, you're not going to overtrade.
Okay.
That is the first thing.
I'll keep on bothering you in the middle because
Sure.
I have this habit of doing that. So say you're doing 1,000 trades.
Okay.
What percentage of success you feel is a good success percentage considering the probability of success?
So it depends on the trading strategy and risk management.
Yeah.
With my kind of trading, I think even like 40% success will be fine, because when I get into the losing trades, maybe like 2-3% of the trades it will be big losers, and even big losers also, since my exposure to the capital is less, the capital that I keep in the trading account is less amount. It will not be too big compared to the overall capital. But maybe remaining like 40-50% or even 60% of the trades, it will be like break even or small winners or small losers. And maybe around 10-20% will be like moderate winners. But there will be few trades or maybe less than 10% of the trades which are like real big winners for me. I have trades, means option buy trades ran up to like 10x, 20x, even higher than that. Like I think a couple of years back there was a budget day. I took an option for like 100 rupees and I ran it up to like 1,400 rupees.
Wow.
And
that's amazing.
Multiple times similar kind of like there was another day like 1 to 24.
Okay.
And 10 to 100, 10 to 120, 150. Those kind of trades that comes in, but not very frequently.
Yeah.
But maybe less than 5% of the total trades, I get that kind of trades.
Right.
So even 40% win rate, that will give a huge advantage.
Got it. That's why most of the successful hedge funds globally, their win rate is percentage terms is less.
Yeah.
But they generate CAGR of 30%, 32%.
Correct.
So you are almost like a hedge fund. Yeah.
Okay. So when you do the trading, there are a lot of fine tuning that we can do. Like people may not be knowing, or people may be forgetting a lot of small things where how to compound, or how to think probabilistically, or how to approach the market as a whole, like a holistic approach. Those things are missing with most of the newbie traders. And you gain that experience maybe 10 years, 20 years, then you get into that stage very gradually and slowly. That is where people are missing and people are losing.
Typically, how many years a person take? Typically, I know it's a very open-ended generic answer, but how many years someone will take to reach that level of maturity?
See, if you ask me based on my experience and the people whom I interacted with, their experience, I would say 5 to 7 years.
5 to 7 years.
Yes.
But 5 to 7, people don't have time. They want everything in 5 months.
Yeah, that means right now I think within like couple of years also it is possible because now we have the resources. But setting up your mind and managing your psychology, I don't know if it is possible within that many years, like 1 to 2 years. I'm not sure. Because money is precious to everybody. And to be a successful trader or extremely successful trader, I think you need to detach with the money.
Yeah.
Frankly speaking.
Yeah.
So I see money as a score.
Yeah.
Even when I had a lot of debts and I was not able to meet both the ends, even then while trading, I was treating money as a score only.
Yeah. That's very interesting thought. Actually, money is just the raw material to run this business. You have to detach yourself from there.
When you see some unrealized profit on the screen, you start calculating.
Yeah.
Hey, this much money I can buy that thing, this thing. Or
Yeah.
when you lose some money, you think, okay, if I didn't lose that money, I could have done this thing, that thing, and all with this money. So that kind of thoughts, it's not going to work. Then you are not trading the market.
That's true.
You are trading the money. So it is not going to work.
Okay.
So I'm 100% discretionary trader. Doesn't mean that I don't have any rules. I follow the very simple things because back in the days when I started trading and when I started learning the market, I was following all the indicators. The problem with me is I don't trust any indicator or any strategy without even going into it. So while learning about each indicator, I went into it and I learned how they calculate the levels and how they calculate the price and lines and everything. I found that most of the indicators, the logic is pretty much same. They follow the trend, they follow the price action, they follow the volume, they follow the basic stuff. Whatever indicator you take, whether it is MACD or moving average or any kind of the VWAP or anything, it's pretty much the prime logic behind the indicator is same. So I started watching the plain chart with my bare eyes and started building that confidence and applying that logic in my trading. It's not that I hate the indicator or anything. It is okay. It is good for building your early steps. But once you are into the trading, don't rely on the indicator, but use that logic. The people who have built the indicator, they are smart people. They understood a lot of things of the market and they put it in an indicator, but readily using that may not help you, but understanding that logic will help you really big.
Brilliant.
Yeah, I use those logic. So even if I am a 100% discretionary trader, I use that logic, I use that strategy. Mostly I use the swings, swing high, swing low. That is the predominant thing I use for my big trades. Okay. So, and this is very, very important. Anything can happen in the market at any time. If you remember last Friday, which was the Bank Nifty ATH breaking day after many months. So that day, I was extremely bullish because after a couple of months, Bank Nifty is breaking the all-time high. And after many months, Bank Nifty outperformed the Nifty on a weekly candle the prior week and that week. So it's a very bullish sign. So I was headlong on Bank Nifty. Even then, this was in my mind. So still I kept a limit. I took some extra risk and extra exposure using the prior few days profit. But I didn't go overboard. Even though I was like extremely bullish, I didn't go overboard because of this reason. And what happened? Midday, there was a big dip, very big dip. The entire rally was faded in a jiff. So I was having huge unrealized profit. In 3 minutes, it went to like negative. I could not even cut the position.
And if you would have gone overboard,
I would have gone broke.
Lost a lot of money.
So I was okay because my position was affordable, even though it was big. So I just waited. I waited for a few minutes how the market is reacting to that dip. Immediately it gave a bounce and it sustained there. And I exited with profit only. But maybe like 30% of the unrealized profit I saw in the morning. That was fine. But later when the market was again moving up, I could get in and I could make more than what showed in the morning.
And as you said yesterday that if your quantity is high, because of the mark-to-market loss which you'll see on the screen, probably you would have booked your loss.
Correct. Exactly.
So fortunately, you have managed that money, which is the risk management or the money management part. You manage per trade exposure was within your control.
Correct.
You don't have to square up the position.
So anything can happen in the market anytime. That was the perfect example. And that trade, I think I can show you which would be the perfect example as to how I take the trade.
Yeah,
So
sure.
this is Bank Nifty. And if you look at here, Bank Nifty, this was the previous ATH. And it was making small swing low, swing high. Then again lower low, lower high. Again lower low. Lower high, again lower low, then again it made a higher high here, then higher low, this higher high broke here,
that was this day, brilliant trade.
This day I became extremely bullish. So this week and this week, these 2 weeks gave me like these times and all when the market was like correcting, I was trading mild and I was like going break even or small profits, small loss. I was going like that, but to compensate everything, this 2 weeks gave me huge profit, because one thing I do is I don't like to take big trades against the predominant trend. Now the market is making the higher highs almost every day. So I don't want to short. Even if the market brings a correction, I may take only very small short position. But after the correction, when the market comes back up, I go with a very heavy position. Because we are in a bull market. But if the market is breaking down and going like creating this kind of pattern, then I may continue to short also. Those times I won't trade long.
So you're talking about say Nifty, which is the market benchmark. So if Nifty is going down, and Bank Nifty is also going down together, then you won't mind increasing your exposure of short in Bank Nifty.
Correct, exactly.
Fair enough.
And from this day onwards, I've been extremely bullish on the Bank Nifty. But from Friday onwards, I'm not bullish on Bank Nifty. The reason being, if you look at compare Nifty to Bank Nifty, it started underperforming because Bank Nifty is a benchmark index. Bank Nifty is a sectorial index. So there are sector rotation. When Bank Nifty's turn comes in, it will go heavy. So that will be maybe a couple of times in a year. Maybe 3-4 times a year, and that each cycle may last 1 to 2 weeks. So those times go heavy on Bank Nifty when I want to go long. Otherwise, remaining time go very mild in Bank Nifty and go with the Nifty, because if you look at the Nifty, it is giving a consistent trend. Like see this, it is the benchmark index. If you look at the weekly chart, it's giving a consistent trend. But if you look at the Bank Nifty, it is giving big spike, then consolidation, then because it's a sectorial index.
And plus there is a fair bit of battle between bull and bear in Bank Nifty. There is a camp which is going short in Bank Nifty because of the degrowth in FD deposits and other thing. But tell me, it's easier to, relatively easier, not very easy, but it's relatively easier to gauge what Bank Nifty will do when you have a benchmark Nifty in front of you. It's easier.
Correct.
But how do you trade Nifty? Because there's no benchmark. Nifty is a benchmark itself.
See, Nifty, there is no benchmark in Nifty. But as long as it is making the new highs, then why do I need to short?
That is true. But then the beta, I mean, the movement of Nifty is not as high as Bank Nifty, right?
But the beauty of
with the same capital, you actually can make more money if you are trading Bank Nifty rather than Nifty.
But Bank Nifty gives that opportunity only once in a while.
Acha. And Nifty does,
especially when there is an event, there is a news, and when there is an outperforming cycle, Bank Nifty gives good movement. But Nifty is consistent. And Nifty also, I just follow the prior swingers law. Like if I take a long somewhere here, this breakout, I keep this low as the stop loss. Stop loss, I don't keep the stop loss in the system, but if this level is broken and sustained below this at least for 10-15 minutes, and if it is not able to recover, only then I exit. I don't keep the stop loss in the system. I don't exit in a panic when there is a big red candle or green candle or big candle against me. I just wait for the reaction. And even if there is no reaction, it's not going to hurt me too much because my position itself is a risk management. Size of my position itself is a risk management. So it's not going to hurt me too much. But option sell position, the moment I realize that it is going out of hand, even if my view doesn't change, I just get out of it because you don't know how much is the risk going to happen in the option sell position. But option buy position, I always know how much is going to be my risk. Option sell, people underestimate the risk of the option sell, and people keep making consistent money. And after a point, once big day comes in and they lose so much of money, they think that, okay, this particular day I didn't manage the risk. So these kind of days, if I manage the risk properly, I can be profitable. But it's not the problem of that particular day. It is the problem of the entire strategy that you are following. That people are not understanding. That is the same problem with the scalping also. You can be a successful scalper, but provided you know how to manage the risk when the things go wrong. But many people I have seen, they keep on scalping. In a month also, they make profit every single day, like 30 days or 20 trading days. And 21st day, they make a loss and they lose the entire loss plus capital. Entire profit plus capital they are losing in a one day. It is not because of that one day problem. It is the problem of the style you are following all the 20 days where you made the profit plus that day.
Very interesting thought. That's why, you mentioned in PPT, that anything can go wrong.
Correct.
So your model should keep that in mind that anything can go wrong.
Yes. So that is why my capital exposure is less. Even if things go out of control, and even if, because we are humans, we make mistake, we repeat mistake. I try not to repeat mistake too much or reduce the frequency of the repetition. But still I'm a human. I may make the mistake, I may repeat the mistake. But in a day, if I make a mistake and big blunder, and if I lose everything in the trading account, still I'm fine because what I keep in the trading account is only what I can lose in a day.
That's true. Very interesting thought. You are using candlestick.
Yes.
And you just follow simple higher highs and higher lows.
Yes.
In candlestick.
Correct.
So do you consider closing of candlestick or the high of closing?
Closing.
Then why do you use candlestick? Why not simple line chart?
Because I use 3 minutes chart for intraday trade.
Okay.
And for levels, I use the daily chart.
Okay.
The daily chart levels I mark. And for confirming a breakout, I consider at least 2-3 minutes candle to close above the prior swing high.
Okay.
And if it is a really interesting or the very big positional breakout, I wait at least for 1 hour for the price to sustain above that.
Okay. So because you are so used to candlestick, you are more comfortable looking at the breakout from a candlestick perspective.
Correct.
And there is no particular reason why candlestick, why not bar chart, why not line chart?
There is one more thing. Because candlestick give you all the information, right? Open, high, low, close. The line chart doesn't give that.
Yeah.
It doesn't give that. If you look at this, there is one big.
It doesn't give this. Yeah.
SL hunting.
Line chart will not give
before
this.
The rally, this SL hunting is very this thing. But line chart doesn't give this.
Yeah.
But this tells a very good story. And if you look at, this was a testing candle wherein the market, because now it is looking small, but that time it made huge fluctuation in the market. So this kind of testing and this kind of another testing and recovery, it doesn't show in the line chart. But this gives a very good comfort. But yesterday I could not. I was bullish from the morning. From the morning I was posting in my Telegram also. It's a free Telegram. I don't have any paid services. There could be big move, potentially on the upside. But it was giving so much of confusion. Then I did many trades. Almost everything ended in small profit. But I could not take a big trade because market was giving so much of confusion. This also, when it recovered here, I took some long, but I covered, but because I was not getting it. Then finally I closed the terminal and I said, okay, enough is enough. It is difficult to catch.
Very interesting.
So that's why I used the candlestick chart. And one more thing, the candles are like this, right? Daily chart. What people are looking at? People are looking at, okay, this is a bullish harami pattern or inside candle. And there will be, this is a close to bearish engulfing. I go one step ahead. I save all the daily charts. This is Monday, Tuesday, Wednesday, Thursday, Friday. From 2018 onwards, I keep saving the intraday chart like this. Any special events or special trading, I mark it here also. And what I do is I go into the chart. Let's say I can show you some very interesting patterns wherein the market keeps on repeating the same patterns, like continuously. See this. All Thursdays market is going up, or sorry, Wednesdays. All Tuesdays it is getting last hour sell off, and all Mondays green. See this. All Mondays green.
This is futures price?
This is spot.
Spot of Bank Nifty.
This is spot of Bank Nifty. See this? 1, 2, 3, 4, 5. 5 weeks consistently. Tuesdays last hour market was firing. So all these patterns I recognize, and see this. Every day, every Thursday, market was getting sold off. This was in 2021, I guess. So all these patterns I track and I use it for my trading.
You are tracking the injections, huh?
Correct. Because when I see some specific pattern is forming in 2-3 days, I go back to the entire chart history of like 4 or 5 years.
Wow.
I see if that combination repeated previously, then if that happens, what happens next? Then I don't blindly trade on that. Then that helps gives me more confidence and helps me to take a better decision.
Yeah, your subconscious mind is fed with this information. So whenever you are trading, it's all about position sizing.
Correct.
If you are if you are getting a trade in the right direction, and historically also that direction is supported, then you increase your quantity, right?
Yes. Plus,
this is like daily seasonality you are capturing.
Yeah.
Nice.
Every day I manually copy and save it.
So this is for Bank Nifty and all India?
This is only for Bank Nifty, but last year onwards I started tracking for Bank Nifty and Nifty.
Acha, interesting. Very interesting. Let's proceed.
So these and all, now I think everybody talks about it. Previously, I used to hear that trading is a zero-sum game, but I used to say that it is a negative-sum game. But now everybody is saying that it's like self-explanatory.
Because of the cost you are paying.
Correct.
It's eventually
usually negative-sum game.
Yeah, it is in favor of
government
gambling den providers.
Yeah. So
we know the numbers of NSE, we know the numbers of Zerodha.
Yeah.
Amazing.
So trading is kind of business, but you can do it as a gambling. You can do it as a business. The biggest advantage and disadvantage of trading is ease of entry, which attracts so many newbies. Like SEBI's report, it says like more than 90% of people are loss makers. But the fact of the matter is, like maybe around 50% of the people in that, they could be just come and go.
Yeah.
In those 3 years, they might have traded maybe for a 1 day, 10 days or whatever. They may not be traders. But if they take the real picture of the traders, I think that it will be much better.
Yeah.
Because this ease of entry is bringing a lot of people, they come and go.
Yeah.
All of them are getting captured into the losing category. Which exaggerate the numbers.
Yeah.
Okay, this is one thing I believe. Only one person win in the market big, because I believe only they put in required effort and stay long enough in the market. Many people, they come and go, or they don't put in sufficient effort. They don't have the perseverance. That is one reason. May not be 1%, but not more than 10% of the people are putting enough effort, is my belief. It can be wrong. It can be it can be incorrect. It depends. But that's what I have observed.
This is fact. I think this is valid for everything what we do in life.
And one thing, Zig Ziglar said, you were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win. Because fear of success is a big problem in stock market. People start making money, then they start feeling guilty, saying that, okay, other people are losing money and I am making that money. The moment you have that thought, it is gone. Every business is like that. Business means you are offering a service and you are getting the money from somebody else's pocket legally. So legally and ethically. So that is business. So we can't do about it. Every business is like that. Trading is also like that. So fear of success is biggest enemy compared to the fear of failure in trading, at least my belief. And fear of failure, many people don't take the trading, take some trade thinking that, okay, what if this trade fails? Trade will fail. Maybe even my success rate, typically it could be maybe 50% or whatever, because I booked so many losses. And even any profitable trader will book losses. George Soros booked losses, or Jesse Livermore booked losses, or even Warren Buffett would have booked so many losses. So there is nothing that you can win in all the trades. There will be losses, so there is no fear of failure required. It's all basics, but you have to inculcate this thought process into your subconscious mind. It has to be your second nature.
And you need to hear this again and again, again and again to re-emphasize this in your mind.
And trading resources, primarily NSE India for various reports and data I use. Option chains, means option chain is delayed, but still I refer that also in between, not just a broker platform. Even NSE also I use. Trading View is what I use for all the all the charts and indicators, or any data, not data, chart related things. And tradingeconomics.com for news and data release and everything, like plus crude, currency, commodity, all those prices I track to see if there is any anomaly. Because sometimes those anomaly can trickle down to the stock market. If it is normal, like 2-3% or those kind of movement, it is okay. But certain times, if there is any global event, those are the things first react. That will give us a clue. IG.com for global markets. And this, I use this, but people can use anything. Like there are many platforms for OI buildup. And I personally know him, so I felt it comfortable, so I am using it. And the brokers, I think previously I was using these three, but now I added few more. Dhan and Nuvama I didn't trade much, but pretty much most
Why
brokers.
Why are you trading with so many brokers? What's the need?
It is a part of risk management, because when I take a trade, I stagger the entry most of the time, like adding to the winning position, or when there is a retracement after breaking my level within my range, I keep on adding. But I need to control my initial position. So what I did is the amount of trade I need to take in one staggered entry, that much capital I keep in one trading account. Like if I have 5 trading accounts, the amount is split in between 5. First I take in the first account. If I want to increase the position, I go to the second one. If I want to further increase, third account. If I want to go to the full position, all brokers I take the position.
Oh, okay, interesting.
So otherwise I need to check how much money I have the exposure now, how much quantity. I don't have to worry too much about those maths. I can just keep on entering in one account until I get the rejection order.
Interesting.
And another thing is, when you make profit or loss, it doesn't, like if you have huge quantity in 5 different brokers, let's say one broker you are making 1 lakh losses, another broker 1 lakh losses, another 1 lakh, for total 5 brokers you are making 5 lakh losses. And you go through all the 5 brokers separately and seeing 1 lakh losses, it doesn't hurt too much. You are not becoming emotional. But if the entire 5 lakh losses, if you're seeing in one account, you become emotional.
Absolutely.
Same with the profit. Typically, I don't track the P&L during when the trade is open, but at times I need to, right? Still, or even after closing, when I go and check all the accounts. So I don't add up, or I don't, means back in the mind I will be knowing that how much will be the profit and how much will be the losses, but still I don't visually look at it or visually calculate and everything.
Brilliant. It makes so much sense to have multiple brokers now.
Yeah. And another important thing is the outage between among the brokers. It's very common. And even if one broker is down, my exposure is only maybe 20% of the total trades, and I can very well manage that with the other brokers' positions. That is also another thing. And I rarely get hurt with these kind of things like outage. Only if it is a market-wide outage, I get hurt. Otherwise, one broker outage and all I can manage with other brokers.
Right.
Okay. In the recent SEBI report, there was a mention about the algo trading and system trading, right? So many people who are doing the trading with algo are profitable, and mostly the people who are the discretionary or manual traders, they are the ones who are making the losses, right? But still, I opted to become a discretionary trader because the amount of money that algo made was huge, but the percentage return they have made may be very nominal. Nominal in the sense, in the trading world, maybe 20%, 30%, 40%, or even 50%. 50% could be the extremely highest, the higher one. Could be. Maybe I'm wrong, but that is my estimate.
In algo trading,
Yeah,
I think it's typically 30%,
30%. Yeah,
not more than that.
correct. So being a discretionary trader, if you do the real speculation, there is there is nothing. No system can beat that.
I like that usage of real speculation. You want to be diplomatically correct. That's why you're using it. Yeah.
So indicators, so many people are using, but if you know the logic of the indicator, logic behind the indicator, you can make use of that logic without purely depending on the hard-coded numbers or anything.
That's true.
So that gives you an edge. Just that you will not be able to diversify too much into that. Like if you cannot trade 100 stock manually, but just one index is enough. If you are an individual, if you want to make big money for your comfortable living, just one index is enough. You don't even have to trade multiple index. So that's why I'm a discretionary trader, but it depends on everybody's preference, and some people will be comfortable with the system, some will be discretionary. So
That's true. So when I started my career in 2006 as a trader, I started with crude oil. I traded only crude oil for a certain number of months. Then I added natural gas because there was a very strong relationship between crude oil and natural gas. And the focus was there only for many, many months. Then I added gold because there was a relationship between gold and crude oil.
yeah,
And then USD INR came in the month of August 2008. So I added USD INR because anyways, when you are trading MCX gold and crude, you are indirectly trading INR also.
yeah,
So that was also one of the instruments which got added. And I've been a discretionary trader in the initial part, and then algo trading came in India in 2009. But we focused on high frequency algo trading, not low frequency. So the work which, as a trader, what we do is low frequency in nature. Like what you are doing is also low frequency.
Yeah.
That you don't trade all the time.
Yeah, correct.
You're not a scalper.
Yeah.
Whereas HFT algo is more scalping, trading all the time, present in the market in the bid and ask all the time.
yeah,
So why I decided to get there, because being a discretionary trader, you don't want an algo to be also a low frequency, because you're already doing a low frequency as a discretionary trader.
Exactly.
Then what's the point of developing an algo which is low frequency? Because always a manual low frequency trader will generate a better return.
correct.
Then
Yeah,
an
that
algo
is one
will
advantage of algo trading. You can do the high frequency trading. You can capture small anomalies in the market.
Yeah,
Small price differentials and all you can capture.
yeah.
That is
there you need a very strong
yeah,
technology.
yeah,
Because there the fight is not in seconds or microseconds.
Yeah.
It's millisecond.
correct, in milliseconds. Yes.
Yeah, that's a very interesting domain. But I really have very high respect for discretionary trader. Even in my prop trading firm, we have 300 discretionary traders.
300.
Yeah.
Wow.
I'll show you the desk after we are done with this interview. So I have very high respect. It's not an easy thing to do,
Yeah,
but it's an amazing occupation if you know how to do it.
correct. You are actually not trading the market. You are trading your psychology.
Yeah, you're trading yourself. Yeah, you're actually fighting with yourself over the market. That's true.
Okay. These are like common thing: delta, gamma, vega, theta, RHO. Knowing this will not give you any holy grail, but understanding this will give you some, I wouldn't say edge, but better insight to the market. How the price moves and what causes the move. It is better to understand.
Yeah. Actually, I'll just share a few things with you. Sorry, maybe
Yeah, no problem.
some people will say that you're not allowing the speaker to speak. But in the early stage of my life, I understood the structure of brain and the difference between conscious and subconscious mind, right? Conscious mind helps us to take action.
Yeah.
Subconscious mind is far, far bigger, far important. And it helps that journey of prompting conscious mind to take an action. All these options, Greek, may not be immediately of a use for someone.
Exactly.
But if it is stored in your subconscious mind, immediately your connecting the dot becomes much better.
There's a book called Thinking Fast and Slow.
Ari, I have read that book. It's an amazing book.
I read that book a couple of times, but that helps you understand how you react to the losses, how you react to the profits, how to become more probabilistic, all those things. It's mostly it is a bouncer. Like if you read 100 times also, there will be many things that you don't understand. But each time it will keep adding the value to your knowledge.
So 2013, when I was rediscovering myself, before that I was very active intraday trader. 2013, I decided that I want to move from an active trading to a passive trading. It took me 1 year. Lot of reading books, attending sessions like Isha Foundation, Inner Engineering, etc. Reading all these kind of books, where I discovered the power of subconscious mind. Even if I trade less, I can still make much more money.
Correct.
Than trading more and aspiring to make more money.
Yes, exactly.
That thing which it took me 1 year to figure out the right model to trade less and make more money.
Correct.
How much do you trade?
Number of trades may not be high, but mostly like I do small selling and other stuffs. It will be like when I don't have trades, I just do non-direction selling and I just keep it there. But when the market really breaks out, I can't give you a number. Every day I'll have trades.
Every day. So at any point of time you will have a trade open?
No.
Okay.
No. There are days like market is moving in a small range, but it gives a feel that it is going to explode any side. You don't know what to happen. Those times I just stay away. Whenever it gives a confirmation, I get in. Like not every time I have trades, but every day I have at least one or two. Means at least minimum trades.
Let's also, I'm enjoying this conversation with you because very similar kind of an orientation we have. Let's talk about this term which you used called feel.
Yeah.
There's a concept called trader's gut.
Yes.
Right? Which many people have tried to scientifically define that. And I hope now in the AI world, trader's gut will also get objectified. But historically, if you read books, they have always said that finally it's the gut you have to use.
Correct.
And don't ask me how to use it.
Correct.
It's a feel.
Yeah.
Right. So tell me, how do you get the feeling that this is not the market to trade?
See, there is another concept of like 10,000 hours of practice to become a master, right?
Yes.
I've completed way more than 10,000 hours staring at the chart and data. So whenever the market is like about to move big, I could see that in the prices. And many times, if you look at my Telegram also, I just mentioned that the market may give a big move and within seconds or within minutes, it happens many times. That is trader's gut, but that gut comes based on your experience and whatever time you spent in front of the chart. And if many people ask me, how did you say that? What was the reason for saying that? But I can't clearly tell that because I'm looking at the price and the way price moves. Maybe the price is moving in like 1 rupee, 2 rupee range and immediately started moving in like 5-10 rupees. That kind of jump is there and some sudden dip comes in and it is immediately brought back. So those kind of small nuances, but it comes based on experience. The amount of hours you spent analyzing and watching the chart.
Yeah. I just give an analogy to my students or friends who learn markets from me. That in that movie Dilwale Dulhaniya Le Jayenge, where Shah Rukh Khan said no, palat, and she did. Looked at him. Have you seen that movie? No. It's a very famous movie, a Bollywood movie, where Shah Rukh Khan, towards the end, Kajol was the actress, and he said while she was walking, Shah Rukh Khan said palat, making assumption that she will see back again once before leaving.
Okay, understood.
And she did. So it was a gut, right? That he knew that she will. So that's the level of efficiency of your subconscious mind get into. If you look at chart on a regular basis, like 100 chart, 200 chart, you read every day. It takes about half an hour to just go through all the charts.
Yeah.
But it's like a language of market which you are inculcating inside.
On top of that, there are 2-3 things that I do. One, I completely refer my stored charts, intraday charts multiple times. Mostly at least couple of times a week. And whenever there is a situation also, I go back with my notes. So for some days, I'll have the notes there and I read the notes if I have any confusion. That is one thing. So I can understand what is possible in trading. Like some days market is keep on moving up and people start shorting saying that market has gone up a lot.
Yeah.
But there are different chart patterns wherein the market went up further ahead. Like even the days where the Nifty rallied 400 points, after 400 points rally, I have gone long and made money. Even recently also.
It's a brilliant template you have, by the way. Huh? Please allow me to use this and develop similar, something like this in Stockage. I mean, with your due permission, I want to take that. It's a brilliant way to look at things. I have never thought that way. Typically, if you look at a running chart, I mean, you can always look at that 9 a.m. to 3:30 market in a running chart, but looking at in a blocks, it gives a very different impression. Very interesting.
And I said two things. The second thing is I go to the Dow Jones chart on the daily chart. I go to all the way back to like 1920s and I go to the all swings and ups and downs. I think until 1930 or 35, 40 or something, it's only lines. It's not candlestick chart. After that, we have the candlestick chart. But looking at that chart gives us the feeling that, okay, anything is possible in the market. Because now the people are saying 12,000 and people are humiliating them. The reason for humiliating, now we are in a bull market and we are clearing ATH every day, but now is not the time to think about the 12,000 or 15,000 or 18,000.
Yeah.
Now is the time to think that the market keeps on going up. But I wouldn't be surprised at one point in the later stage if the market goes back to 12,000. It is possible. It is not impossible in the market. But now, absolutely, it is not the time to think of that. Now the market is going up. Go with that. But when the market start breaking, it may break. There can be any black swan events or anything which can happen and the market can go back. Like even 2008, market crashed about 60-65%, right? And in 1930s, the US market crashed 90%, 89% market crashed. So people say this time it is different, but nothing is different.
It's not different. It's pretty much the same.
But absolutely, now is not the time to talk about 18,000, 20,000 and all. It is moving up. Let's go with it. That's what my theory.
That's very good.
Yeah. So all these conviction I get when I refer to that Dow Jones chart. It's more than it is nearly a century, right? Different outcomes like 1987 crash, 1930s crash, World War, how it reacted, World War I, World War II, how it reacted, and different bulls and bear cycle, different interest rate cycles, inflation cycles. I do all these comparisons.
Amazing. That's again one additional learning for me, that studying the Dow Jones chart for last 100 years. This will be very interesting. I'll do that study. चलिए आगे बढ़ते हैं.
And these things, like you said, it is not going to add value to the to you right away, but it is giving you that better gut.
Brilliant. You don't understand Hindi at all, or what? You don't speak at all?
Very difficult.
Okay. Just kidding.
So one question that I hear from many people is what strike I should take. And if you have that question, I would mostly suggest non-expiry. Mostly I suggest to take at the money. Means I suggest means I'm not advising anybody. I'm not eligible to advise, but that is the better option I felt. If there is no decision that you're not able to make, go with at the money. But there are better options.
Yeah.
So this
now that you have mentioned this, I forgot to add a disclaimer to this whole video when we started. That there is a disclaimer, please. Whatever he is saying is only for education purpose. There is no advice, suggestion, or anything. Because he is a trader, he is helping us to learn what he is doing. He has no intention of providing any service. Even your Telegram channel, we'll mention his Telegram channel link, his Twitter channel link. It is only for education purpose. Yes. I hope you don't have any service.
I don't put any trade advice there. I just mention what is my view. And every time I give a risk disclosure also. If you take this, means for this trade, this is the risk.
Yeah.
I am ready to take that risk. It depends on each person.
So it's a for education purpose. And in future, if he does anything which has business orientation, between you and him. I have nothing to do with whatever he does in future. I just want to make this thing clear.
Plans. I have absolutely no. I have, saying publicly, I don't have any plans.
Fantastic. You grow as a trader. India needs still the top 100 traders from our country who will reach the global scale. we still have not been able to identify more than 10, 15, very honestly.
Okay.
I know those 10, 15 people who will reach there, but whenever I've seen, I've aspired to identify more such traders. Some of them actually go in the wrong direction. Either they become fund manager, managing other people's money, or they become educators. And I always get back to them and tell them that, why have you done that? I mean, you were such a brilliant trader. You would have grown as a trader far, far bigger than getting into educating people. But that's okay. Everyone has their preferences and limitations.
And adding to that, I am also saying that whatever I am saying here, it may not be completely in alliance with your thought process. It is just what I understood from the market over the last 10, 12 years and what I believe or what works for me. It could be something else that works for other people. And there could be some other truth for some other, not truth exactly, some other things.
Holy Grail,
yeah,
kind of
thing. So it's all my opinion, what I understood. You can agree, disagree, you can think differently. It's all fine because there is no right or wrong.
There is nothing right and wrong. That's brilliant. Well said. चलिए आगे बढ़ते हैं.
Okay, so many people ask me about what strike. So if there is, it's very, if you are not able to take a decision, it is always okay to go with the at the money on non-expiries. And there are times in non-expiry days or even expiry days, I may go with the very far OTM also. Like Bank Nifty, even I take 1,000 points away options also. Sometimes I take in the money also. Like expiry options, even if I trade most of the time, I trade with the deep in the money options.
Okay.
Non-expiry, mostly I trade with out of the money and sometimes far out of the money. And the maximum number of the time at the money or one or two strike away.
Okay.
That is how I pick. And the benefit of OTM is option prices multiply very easily. That is the benefit of OTM if you are taking at the right market. And 90% of the market, it goes worthless. if your decision is wrong and if your view is wrong, the OTM hurts you more than anything. So I take OTM when I have very strong, very convincing, very strong directional move only, I go for OTM. And ITM and ATM, option prices rarely multiply. It doesn't multiply. I'm talking about the percentage time returns. Absolute return will be higher for ITM or ATM, but percentage return will be higher for OTM in terms of like largest moves. And OTM is good for catching a trending move for a buyer. If you're an option buyer, OTM, and if you're finding a very good trending move, OTM is better than ITM or ATM. And for ITM and ATM, for a scalper or a seller, it is good to get in and get out, or they can make better trades. And OTM safe for selling in a boring market while waiting for a setup. This is what something I do. And the market setup is boring and it is in a very tight range. It is not giving anything. If I sit idle, what happens is I'm a human. I will have the tendency to take unwanted trades. So what I do is I go a little far OTM and I sell some call and put and I sit there. It gives mild decay, small profit, but I have the feel that, okay, I'm in a trade. So it cuts my urge to take unnecessary trades. It is a kind of hack to control the psychology.
Okay.
And for a seller, deep ITM is good for catching a trending move. And OTM can be, a seller can earn consistent.
Can earn consistent, but one large one can take away money. Okay.
So if a seller sells OTM, they can earn consistent, but the problem is if you keep a stop loss, it usually gets hit because 10 rupee option you sell in a index, you keep a stop loss at 15 or 20 also, it gets hit very frequently and it's very difficult. But if you don't keep a stop loss, you can consistently make the money. But the problem is when there's a big move comes in, this 10 will become 100 and you will lose all of it. So for a seller also, it is not advisable to trade OTM similar to the buyer unless you have some reason or some kind of strong is a reason to back up a decision. Don't go for OTM just to think that it is a safe bet.
And it's always enticing to trade a lower value, lower premium option.
Correct.
It looks like that, oh, it's so cheaply available.
Yeah.
But that's not cheap. Anything which is cheap is
yeah. So
worthless.
There was one day, I think maybe last year, I think, Nifty was in a correction mode. It keeps on creating the lower high, like I showed for the Bank Nifty. And then it started coming back up. And one expiry day, after 2 o'clock, Nifty started moving slowly up and it cleared the previous swing high. And it was not just a swing high clearance, it was the structural change. Like from lower low to lower high structure. With that break, it was changing to the higher high, higher low structure. So it cleared and it sustained there for like 10-15 minutes and it came and retested that high. Then again it started moving up. Then when I was looking at some 70 points away option, it was trading at 1 rupee. I just started some good quantity. It's only 1 rupee. Okay, I thought it's a structural change, so it can blast. It was around 2:30 time. If not, it is just 1 rupee. And within few minutes, it started blasting, and that option went to like 32. And when it started coming down, I exited at 24.
Wow.
And that
you need to be lucky also to get that kind of a trade. Yeah.
See, that kind of opportunities, the OTM is very good. That's what I'm saying. Because it is not just a breakout, it is a structure change. So those kind of important situations, you can go with OTM.
So every situation warrants a unique proposition that this strike price is the right strike price for that situation. We cannot standardize this. We cannot create a model for this.
If somebody is not able to take a decision, I think ATM works best.
ATM works best.
People.
Okay, fair enough.
Probability and risk reward ratio. So this is very funny thing. Probability and risk reward ratio. The reason why I'm saying is this is what most people are talking the highest number of times about. If you go to any social media, this has 1:3 RR. This has 1:5 RR. But in real life, how many people are following that? It is very rare. The people are saying that, okay, this has 1:5 RR, but I hardly see people sitting on a trade to get that RR in real terms. So that makes a huge difference in the trading. So that even if your probability is like 40% success ratio, like your success ratio is like 40% or even 20%, but if your risk reward is much better, like 1:10 or something, or even consistently, you can make big money in the market.
Let's see the example.
This is
I
just
think you have a calculator, right?
It's a calculator just to demonstrate how it is. I think I need to make it.
Yeah, you have to zoom in.
See, your winning probability is 75%, but but your risk reward is like 0.2. Your profitability is like -8%. Your risk reward is like probability 50%, 1:1 risk reward. This is before charges. 0, like you will be break even. But let's say your
50-50 chance.
Yeah, 50-50 chance.
But risk reward is 1:3.
You will be at
1:2 is 17%.
17%.
And if it is 1:3, it's 25%.
Yeah. So you can play around with the numbers like this.
And if suppose it's a low probability, winning probability,
like
very low, say 40%.
Yeah, I'll say 40%.
Yeah.
And
risk reward is 4.
Risk reward is 4. You will be like 20% profitability.
So if I have to generate 30% return, then with a low probability, your risk reward should be very high.
Correct. So this is just to demonstrate or play around and understand.
This is the holy grail. This Excel sheet is the holy grail.
This is just to understand or code your mind with the right thought process.
Can you give this Excel sheet?
Yeah, sure. I'll send you.
I
think it's there in the PPT.
It's there in the PPT?
Yeah.
Will you give this PPT to our audience?
You can convert it to
PDF and then, okay. So we will give you the link of this PDF and Excel sheet also will try to give you so that All of us believe in open source learning. Sikho, India Sikho.
Okay, position sizing and money management. This is what we spoke in detail earlier. So I don't think I need to explain further.
Let's proceed.
Yeah. This one, risk management also. Like risk management, I need to add one thing. The purpose of stop loss is risk management. What is important? It is risk management is important. Stop loss is not important. Different people will have different method that works for the risk management. You need to know where to cut the losses, and that when you cut the losses, you should not be psychologically or emotionally or financially. It should not create a dent in your emotion or finance. That is where the line you need to draw. For that, you can use multiple methods. Yes, stop loss is one of the method to manage the risk.
Lovely.
That people are not understanding. People are hard-coded with the stop loss mentality. I'm not against the stop loss. It is very important. You need to cut your losses. You need to manage your risk. But think beyond stop loss. There will be multiple other opportunities to manage the risk.
Very interesting thought. So stop loss is one method of risk management?
Yes.
There could be other methods also.
Yes. I use position sizing and capital management so that I can reduce my reliance on stop loss. And every time when I sell an option, there will be a hedge. So that even if something unusual, my option sell position will be always like less than 10% of my option buy position. Like in a normal market, extremely good market, if I buy like 10 lots of or 20 lots of option buy trades, when I do option sell trades, I hardly sell 1 or 2 lots. That's it. And even for that, every time there will be a hedge. So when I am short in the options, even if the market moves like 1,000 points, 2,000 points or 10,000 points, it will not create a dent in my finance.
Fair enough.
Because people are underestimating the risk of option selling. It has certain advantages and certain disadvantages. Similarly, option buying has certain disadvantages and certain advantages. So nothing has a intrinsic edge or inherent edge. I used the incorrect word.
So because we are recording a live market and you have been, you traded a bit, right?
Yeah.
Just to show your model. Right. So if you can share with us, what did you trade and why you trade?
So this morning when the market started, let's say, I saw one interesting thing in the mid-cap Nifty, similar to what I saw in Bank Nifty earlier. So if you look at here, look at the daily chart. Here, if you see on September 5th, there was a high, swing high. Then the market corrected. Again, it came back and it took out that high and went to all-time high. Then again, another set of correction. But that set of correction, from there, the market was trying to recover. Initial recovery, this high took as a resistance. Then again fell. Again, 2 days back, it went to that high. Again, it took it as a resistance and came down. Another time, another attempt, failed, came back. But this morning when the market opened, it opened below that. Immediately it went above that and it was like sustaining above that. So what I did is morning, since I know that I'm into this recording session, I didn't go for any major buy trade or anything. So I did some trades here. Here I took some calls. Mid-cap 13,200 calls I bought for 151 rupees. And since I'll be traveling and I'll be moving around, I don't want to expose to big risk. So 13,400 calls I shorted for 38 rupees.
Okay.
Just as in case if it is consolidating, this decay will help to offset this loss.
Okay.
So
plus margin deployment will also
correct.
reduce.
Yeah. And then later when the recording was about to start, I exited that position. Whatever I bought for 151, I booked for 171. Some 20 points profit. And whatever here, which I sold for 38 rupees, I exited at 42 rupees, just 4 point loss.
And this was purely looking at this chart pattern, nothing else.
Nothing else. And in the morning, I also shorted in another account, I shorted 13,250 put at 46 rupees. And I took 12,950 put as a hedge for 5.5 rupees. And later, before the recording started, I exited that at 28 rupees, somewhere like 18 points profit. And the hedge I exited at 3.
So you were bullish. In one account you did call bull spread.
Yes.
And the other account you did put bull spread.
Yeah. Yes.
Why?
Because the risk level is different, right? The risk level is different. Their risk and reward level is different. The other account, if the market keeps on moving up, I can make about more than 100 points profit. And here the risk is different. The reward is also very limited.
But it's both mid-cap Nifty.
Both mid-cap Nifty.
So how have we defined risk reward different for two different accounts? Based on capital?
These two accounts have different size of capital. This doesn't have enough capital to sell this much quantity.
Oh, so the one which will have more capital, you are willing to take more risk.
No, this one is less, almost equal risk only.
Okay.
Because here it is like far OTM, 13,250. Somewhere about 60 points or like 2.5 strike away only. But here what I bought is like deep ITM. 13,200, some 110 points, 120 points ITM. And what I sold was like 80 points out of the money. So it was like a balanced position. My real intention was to buy little more quantity on the calls alone and ride it until the market starts breaking down and book the profit. But since I was traveling, I didn't want to take that risk. But still I wanted to have the bull exposure to the market because it's a breakout.
I agree. I understand this, but I'm still figuring out that why two different account. You had one call option position and one put option position, and you are playing bullish in both.
I am playing bullish in both.
What's the thought process? Why you are doing this?
The thought process is in this market, even if the market comes down a bit, I don't want to expose to big risk here. And when the market is this kind of situation, even if the market breaks like 20, 30 or even 50 points, like 1 to 2 strike, this premium will hold only up to this much because Monday is expiry. So even if the market breaks about 50 points, which is like 2 strikes in mid-cap Nifty, if that break comes slowly and gradually throughout the day, by end of the day, this will be the premium. Approximately 40 to 50 points will be the premium for at the money put. So I will not have much risk unless there is a big break comes in. And but the profit potential is only 20 rupees, but the risk is very, very, very minimal here. But here what happens is even if the market comes down a little bit, I will have the risk of loss. Let's say market breaks only 10, 20 points down. Here I will have a loss because this will lose more value because this has delta also, more delta and intrinsic value also. So I don't want to have that kind of risk in both the accounts. While I am traveling, usually this kind of trade I don't take. The call spread I usually don't take. Today I was taking because I wanted to have the buy exposure, but
with
I don't want
controlled risk.
Yeah, controlled risk because I am traveling and I am busy.
Got it.
Otherwise, I don't do this selling. I just do the naked buy. That's it.
Got it. That's very interesting. And today you have traded Bank Nifty. Why? Mid-cap Nifty. Why?
Only because of this breakout.
Otherwise, Bank Nifty and Nifty is not giving breakout, right?
Today morning, frankly speaking, Bank Nifty was not looking good to me. It was kind of jiffy because morning Nifty opened green, flat to green, Bank Nifty opened in red and it was not able to come up and it was heavily underperforming Nifty for the last 2 days.
Why didn't you go short then in Bank Nifty in the morning?
See, like I said earlier, trading against the predominant trend, I do only when I have pure reason and conviction.
Got it.
Because when you trade against the major trend, what happens is when it comes back up or when it reverses, the move can be very dangerous.
Yeah. Because of the short covering.
Yeah. So for the last couple of months or last many months, my shorting trades or the shorting market, it is very minimal and very small trades or mostly I skip it.
Yeah. But definitely people have lost money on the short side more than on the long side.
If I see the market is weak, I mostly stay away.
Okay. When will you get a conviction that this is the time to increase the short allocation?
When Nifty, when I see when I see Nifty breaking the prior swing low.
Okay.
So in this case, the swing low,
On the daily chart.
in this chart, the swing low is actually this green line, the proper swing low. That is way too far, 24,753. But if it breaks this level also, I'll be kind of bearish. But if it breaks this level, I'll be very bearish.
So you'll be more net short.
Correct. And based on my experience, I don't think it will come all the way here. It will create more swing lows here.
Because the long-term trend is uptrending.
Because it can come somewhere here or somewhere above this level. Like if you look at your what to say, Elliott wave kind of thing. Like if you consider this as a top, the next correction comes somewhere here and it can bounce, right? So similarly, between this and this, there can be one swing low that creates. So later when the market actually breaks down, there'll be another swing low here. That is my current view. But
Got it. But this was Elliott wave usage was out of syllabus, huh?
yeah, yes.
We didn't discuss, and you're not practicing Elliott wave, no?
No, means I have gone through the basics. I have, I said, every indicator I have studied. Similarly, every strategy also I studied. Similarly, Elliott wave also I studied. I like the concept very much, like bull cycle, bear cycle, or correction cycle, or impulses and all. The logic is amazing, but I don't like to code that into the specific 1.61 times like Fibo. It limits that to Fibo levels and all, right?
That's why you're a discretionary trader. You don't want to bound yourself to numbers, which is fair. We understand.
But that concept, how the bull market is emerging, how each wave is behaving. Like I go to that Elliott theory whenever I see some different action. Like if you look at currently, it is very close to the wave 5 pattern. Base will be humiliated is what the wave 5 says. That's what's happening now. Any correction will be shallow and it will be bought back immediately and base will be humiliated big time. That's what is happening now. It's the characteristics of wave 5. So that characteristics of each wave I like very much. Not the specific levels of the waves.
Again, your subconscious mind is trained.
Correct.
But conscious mind may not be using it exactly the way the theory says. Good. We want to know some interesting book names from you.
Okay.
Do you have the list or something?
These are the books usually I suggest to the people. And probably I can give a quick run through about it.
Yeah.
And these are like mostly the books that can help you. And if you want to study technical, this is very good book. Technical Analysis for Fundamental Market.
It's a Bible.
John J. Murphy. It's a Bible. And if you remember the capital management I mentioned, even he touched base that also in that book. It is there. That is one book for learning the technical analysis. And another thing, Reminiscence of a Stock Operator. My God, I keep reading it. Because the kind of operations that is happening in the market right now, injections and operations, even that kind of things are mentioned in this book, 100-year-old book. It is mentioned there. Amazing. Even now, if you look at my Audible, this is halfway listened. Yesterday when I was traveling also, I was listening to this. It's nth time I am listening to that. That is one book. Then Trading in the Zone, everybody talks about that way too much, so I don't have to. Market Wizards, each book I listen to that at least 2 to 3 times. Because they are my gurus. I didn't have any guru to learn trading, but these Market Wizards are my gurus because I kept on learning their tradings and everything through these books. And one book that is standing out from everything is Best Loser Wins.
Okay. What is that book all about?
This is by a trader called Tom Hogarth. He is still an active trader. He's maybe around 50 in his 50s. Very active trader, high stake trader. And this book is all about trading psychology, like trading in the zones, but in a very different level. And he talks about the importance of taking the loss, talks about the importance of riding the position, approaching the market in the right way. It's all about the trading psychology, but in a completely different level. I listened to it multiple times. I suggested this book to the many people. Almost everybody came back thanking me, saying that this book changed my trading.
Wow.
That is the kind of book that I suggest everybody to listen to it.
You like to listen to books. Huh?
Yeah, I listen to books. That's means previously I used to read, but the moment I got introduced to the audiobooks, because when I was working full time and trading full time.
Okay.
So hand in hand, I
multitasking.
need to take up my learning also. There was no option for sitting and trading or reading, because during the day I'll be trading, during the night I'll be working, and 5 hours sleep. So there was no time to read the books. So while walking, while doing exercises, while driving to the office, I used to listen to the audiobooks that time.
Superb. Superb. It was fun. Very interesting, very scintillating, exciting, knowledgeable, and a lot of one-liners from your conversation. It has helped me a lot.
Thank you.
Thank you so much for adding value to my life.
Thank you.
And I hope, I wish you will be, and you will remain, you are one of the top traders from India, and I hope you will remain and you will grow more
Thank you.
as an independent trader.
Thank you.
Thank you for your time. All right, friends, this is it. I hope you liked it. There's no reason why you should not like it. Especially if you are here till the end, you should praise yourself, because only people who stay till the end really get the essence of the entire learning. And I'm sure you must have made some notes. If not, you should make some notes. There are people who are maintaining diary of face-to-face and writing notes about each and every face-to-face. It has become a Bible for a lot of people who really want to learn and excel in life. If you have not yet started, you can start from this video. It has a lot of things which will help you to grow. I hope you're liking this. If you are, you can just share these videos with your friend and family. And if you subscribe to us, it will add value to all of us. Thank you. Bye. Jai Hind.
Thank you.
Investments in the securities market are subject to market risks. Read all the related documents carefully before investing.